Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market preparation video for our last trading week of September 24th, 2018. So, hey everyone, we have had just a tremendous run in the diamonds and the SPY. Last week, as you can see, we moved up very, very sharply here in the diamonds and the spiders, moving up really strongly and breaking out to all-time new record highs. One thing I want to point out is how important it is to pay attention to where the trend is. Notice this trend right here has been pretty darn consistent. And notice that when we get separated from the trend considerably, we tend to come back to the trend. We find a way to come back to the trend. Now that we have moved so sharply away from the trend here on the diamonds, I think there's a very good chance that we could see this move back toward the trend. And that doesn't necessarily mean we have to fall. We could just consolidate. Nothing wrong with that. There's nothing in this chart that's bearish at the moment. And certainly the bulls have all the momentum. There's tons and tons of bullish momentum here in the market. But just based on price action itself, the chances of a little bit of a rest, a little bit of consolidation are beginning to grow. That doesn't mean we couldn't go a little bit higher. I'm not trying to predict that that's going to happen today in any way, shape, or form. As a matter of fact, what I want to do is take just a moment. Over the weekend, there was just a ton of things being posted around the internet, Facebook, and all over the place, of everybody out there. Well, I shouldn't say everybody, but just lots and lots of people trying to predict. Now, they ranged from, man, we're going up, you know, look out, here we come, 27,000 on the Dow, to those suggesting that the sky was going to fall, get ready for a 20% correction. And, you know, I just want to caution everyone on this. Predicting, as short-term traders, as short-term swing traders, predicting the market creates a bias in you, and that bias in you will affect your judgment when it comes to trading what actually is. If you've ever been a person that has ever lost a bucket of money because you were just sure you had a winning trade, or if you have ever missed out on just an awesome trade just because you were sure the market would fall, then you're involved in that whole idea of predicting rather than just watching and paying attention to what the market is showing us. If we just wait for the market to give us direction, we can easily follow. We don't have to predict, and we don't have to chase around a bias all the time. What I do know for sure is if you fight the market, if you find that you're struggling as a trader, you always feel like you're on the wrong side and you're always trying to defend yourself. When you're on the wrong side, you're fighting the market. And that is a losing proposition that will cause you more pain than you can possibly imagine. Try to avoid doing that. Try to avoid predicting. It's much more important, far more important, how you react to what the market is actually doing than what you think is going to happen. Remember, we can only make money in the market if we move with the market. If we fight the direction of the market, we will lose. So keep that in mind on this thing about trying to predict or constantly trying to predict what the direction of the market is. It's a waste of time, particularly for retail traders. Remember, we're renting a stock, we're not marrying it. And we don't need to have any kind of massive prediction. We just have to trade what the market is showing us so that we can make money. Some of those trades turn out to be really, really good. Some of those trades are mediocre. Some of those trades turn out to be losers. But if we avoid the predicting and just follow what the market is telling us, we'll do a much better job on our trading, and you'll start to see your trading improve. I'm confident of that. Just slow down on the predicting and just watch what the market is telling you. Try to avoid that bias. So with that, everyone, look, trying to avoid this bias, we know we have had a major rally. A rest or consolidation is not out of the question, and it's certainly not out of the question that the momentum of the market continues to carry us higher. We do have clues, however, of a little bit of trouble in some of the indexes. First, let's take a look at the SPY. SPY on Friday kind of faltered here a little bit on Friday. We had this tremendous rally up, but now we're starting to see just a little bit of trouble here in the overall market. Just a little bit of a little bit of caution maybe coming in here on the SPY. So remember, we're very, very bullish here. There's nothing wrong here with the SPY. Clearly, we are holding up very, very strongly. We're holding trends. We're holding. Here's our current trend in the SPY, looking very, very good here. There's certainly no reason to believe that we're ready to just fall. And we're holding above some key support levels. That's also nice. But it's also showing us the possibility that we could get a little bit of a rest, possibly even a little bit of consolidation to move back over to the trend. Keep in mind, markets love to come back to their trend somehow. They like to find a way back to their trend. So watch that close. We could just be moving back. No big bearishness here at all. Now, the clues where I'm going to be watching pretty closely for clues today would be the NASDAQ. The NASDAQ has been struggling here a little bit. And with the tariffs, the new $200 billion in Chinese tariffs kicking in today, right now we're looking at the market just a little bit lower. You can see the NASDAQ is right now looking to open down here. That's below this key support level, gapping down below that. Notice we put in a bearish engulfing candle here right at price resistance. We couldn't break through there. So now the question becomes, can the bulls pick this back up and carry this higher? Or will we have the possibility that this little rising low here fails and we actually create that lower low here in the market? That's something we're going to have to pay attention to. The NASDAQ certainly has the power to, if it gets bearish enough, to drag the rest of the market lower. So I want to be pretty focused here on the Qs this morning, watching that closely. If the sellers really come in strong, we could be in trouble. On the other hand, if the sellers don't come in strong and we find support down in here and buyers start picking this back up, we could be just fine. So watch that closely. That little trend line right there could be really critical. We need to hold in that area and come right back up. And by the way, what I'm looking at here on the Qs is nothing more than what they call a wedge pattern. A wedge pattern can resolve itself in either direction. You want to be careful not to bias yourself that it will pop out of the top or out of the bottom. We don't know. And also keep in mind, this could wander around in here for a while longer before it makes a decision. So just kind of keep an eye on that. But just watch that breakdown in here. If we do happen to break down, we could certainly see some quick selling come into play and break us through that low. Watch that close. On IWM had a pretty bad day on Friday. It's what they call a dark cloud cover candle, and it happened to fail right here at price resistance. So follow through down on that candle should be a little bit of a concern today, but notice we're not getting much of a gap down here in IWM this morning. And let's also keep in mind that IWM did hold above this key support on Friday, and it also is holding above its current trend. So we're not in a terrible situation here on the IWM. Just something that we need to keep an eye on. Let's take a quick look at the VIX. Whoops. The VIX down here, holding right here on this support level. And I want to pull this back, and if you haven't seen this before, this is a weekly chart of the VIX. And you can see this very long-term downtrend that I had marked here has served as support a couple of times. So if fear continues to drift lower, if there's no fear in the market, we want to, and we happen to drop below this level of support here in fear, then we could easily see this drift down into here and test this level of fear. Test this key support, I should say, not level of fear. Test this key support for a potential place to bounce. However, with a little bit of selling coming into the market this morning, a little bit of maybe a little bit of worry, a little bit of rest or pullback, we want to watch this right here, because notice these doji candles down here are not exactly, bearish candles suggesting we're going to drift lower. In fact, it's kind of indicating that we could hold on to that level in there and maybe rally back up. So watch that careful and closely. I'm certainly not trying to predict anything here. I just want to point out that we are holding at a support, and we should watch that VIX in case fear starts creeping in. Let's take a look at T21 22. T21 22. There's nothing fancy at all about T21 22. As a matter of fact, all it is a 4-week new high, new low ratio. It's a ratio of stocks making 4-week new highs and those making new lows. Now, it doesn't tell us a whole lot about a daily direction. What we look at T21 22 for is when we reach these zones up here where we're kind of overbaked to the top side or the downside. Unfortunately, we're not getting those clues. We did get a pullback in this on Friday. So what this is suggesting is we do have plenty of room for upside move and plenty of room for downside move in the market. So it's kind of given us that 50-50 trade. We're going to have to just stay focused on price action and watch at this point. We've actually gone one of the longest periods I can remember for a very long time where we didn't really reach up here into or down here into reversal zones. Very choppy back and forth in here for a long time. So we'll have to just kind of keep an eye on it. I don't know that there's any clues in that, but we will have to watch that closely. Let's take a look at our economic calendar today. Economic calendar, we've got a few things going on here today, but nothing of major consequence here in the market. As you can see, we've got Chicago Fed National Activity Index, the Dallas Fed survey, and then 4 bond events today to be considering on our economic calendar. Now, even though there's not much here on this economic calendar today, keep in mind that the FOMC meeting begins next week, and Wednesday is going to be a very, very big day. New home sales, and then we have the FOMC announcement, their forecasts, a likely interest rate increase. It may not happen, but a likely interest rate increase will occur. So we'll want to watch Wednesday pretty closely, and we could see the market be affected for the next 3 days leading up to that Fed announcement at 2:00 p.m. on Wednesday. So watch that close. Don't be too surprised if we see kind of a dead, choppy market as we wait for that big news to potentially come out. So watch that. On the earnings calendar, we have about 12 companies reporting earnings. About 16 companies reporting earnings this morning. None of which would be particularly market moving. As a matter of fact, the majority of them are actually penny stocks. Nothing there that would be particularly market moving. But if you're holding one of those positions, certainly you want to be paying attention to those trades. Well, with that, everyone, hey, I want to wish you all a great day. And if this is the first time you've seen these videos, do me a favor. Click that subscribe button on YouTube. Click the follow me button on Facebook. Click those thumbs up buttons and drop a comment. I really do appreciate that. And everyone, always feel free to share these videos with any friends and family. I'm here to help. That's what I want to do. And if I can help you do a better job preparing for your day, then I have achieved my goal. Everyone, take care. Have an awesome day. I wish you great profits, and we'll talk to you all bright and early Tuesday morning. Take care, everyone.